Hey, Erin, thanks for joining me on the episode of the Industrial Real Estate Show. Great to see you again.
Thanks for having me, Chad. Appreciate it. Happy to be here.
So this is technically part two, even though we're not going to release part one because
Yeah.
we talked about the longshoremen strike, which lasted 2 days, and we talked for a long time about that.
Yeah, completely understand. And I think we have topics that we have not addressed that are much more interesting to our listeners.
Agreed.
So,
Agreed. So the one big one coming out of Pennsylvania specifically is 3 Mile Island and Microsoft signing a 20-year deal to basically reboot the one reactor that didn't have the partial meltdown. And
correct.
they will be taking all of the power exclusively for a data center. So what are you hearing in Pennsylvania? I know you're actually pretty close to 3 Mile Island as well. So what are you hearing about it?
Yeah, I mean, they did a poll. I think they said it wound up being about 56% of residents are in favor of them reopening the Unit 1 reactor. I think it was the Unit 2 one had the meltdown in 79. And I mean, it took till 1993 to get it all rectified and cleaned up. So there is a watchdog group out there that is expressing their concern for reopening it. They feel that there's not enough safety regulation in place. However, I feel that, they're pursuing a 1.6 billion dollar loan to get all of the upgrades and safety back on track with it. When it was decommissioned in 2019, there wasn't really anything wrong with it. It's just that it became so expensive to upkeep the plant that they wound up shutting that first reactor unit down, in addition to two already not being used. So I think that the majority of the people understand that we are in need of a consistent power generation source that is a carbon-free option. Solar and wind are it varies the output level. So I think for something like this, would they say it was a 837 megawatts it was going to be generating, which could power over 800,000 homes. But Microsoft is capturing all of that. They're taking all of that power. They're going to be utilizing it for their AI program tools, all of that development. And I'm interested to see how people react when it's not supposed to be affecting their taxes. It's not supposed to be affecting their ability to get power. So I'm hopeful because it is a carbon-free option for us that it will go well. And I feel like I'm rambling on. The license is not, it's set to end in 2034. So they're looking for an additional 20-year extension to that operating license for the plant, which would then give it the ability to operate until 2054. And I think there'll be a lot of development in that 30-year time frame that is going to take place, and it's going to impact everybody. So it'll be very intriguing to watch.
What I've found surprising about this development is how few people actually knew that the first reactor had been operating until 2019, because outside of Pennsylvania, I'm sure most people in Pennsylvania were aware of it, but outside of Pennsylvania, if you're not paying attention to it, all you hear is in the media and a Netflix documentary about a nuclear meltdown, and it's sensationalist. And they never mention that the other reactor was unaffected and continued to operate until 2019. What
Yeah.
was the general sentiment back then, like in 2019 when it shut down? Was it just natural gas was cheaper, so it just made more sense to transition to that? Or was there any relief? Were people glad to see it shut down?
Yeah, well, again, there's the watchdog group, right? So you have the people that are taking these sensationalized headlines and just applying it across the board. Like, you know what? I don't think I want that. It sounds pretty dangerous. I live right in Harrisburg or whatever that case may be for them. It's the whole not in my backyard group, right?
Hmm.
Like, we want it, we just don't want it here by my house, right? And funny enough, I mean, it's surrounded by farmland. So while it's in the river, everything on the outskirts of it is mostly agriculturally zoned. So while I think more people are open to the idea now of having that additional energy added to the power grid, I think more people are aware that a lot of places already struggle with maintaining their power levels. You can take Texas as an example. They've had some issues. And I think you had mentioned last time, I think you said there was about 95 reactors in the US that had existed and then a bunch shut down. I forget what the number you had told me the other day was. And I think we're going to start seeing a lot of them, if not all of them, any that are able to open back up. I think within the next 5 to 10 years, you're going to see most of them open back up. My question is, are they going to start building new additional plants during that time as well to basically I heard there's a project they're trying to, kind of connect these two major power grids together to, help with that consistent power need. And I think this is going to be something that enables that to take place successfully.
Yeah, I think that this is the biggest problem facing North American business right now is a huge growing demand for power and our supply staying relatively flat. So I agree. I think that there's going to be more. I believe it's 41 plants that have been shuttered, which could have the capacity to be brought back online. Whether depending on what state they're in and how much money would be involved, I think it's just going to be much easier to bring back an old plant than to try and get a new one pushed through, which could take a decade. And then you've got so much political pushback and community pushback. And like you said, everybody's into the not in my backyard mentality, and rightfully so. I don't want to have a nuclear power plant built in my backyard either. So I get it. But the power issue is it's a major concern. But yeah, Microsoft is taking all of that power, which didn't even exist. What they're developing large language models and AI that didn't even exist 20 years ago, and now we're having a whole nuclear plant dedicated to it when it could otherwise power 800,000 homes. So yeah, it'll be very interesting to see what gives on this.
Right. Yeah, I agree. And it's going to add a ton of money to our GDP in Pennsylvania, right? I think this is like 16 billion with an additional 3 billion in state, tax revenue. And I think that, I'm sorry, state and federal, like not just state, but I think it's something that it could really change the course of your economic status, in the fact that, like you said, like that's now coming almost out of nowhere. Yes, we're going to be borrowing money to get the plant back up and running, but you do that, you maintain it, you hope that in the future now you're generating even more because of upgrades and that type of thing. It's going to be quite a journey, I think, watching this unfold. And as of yet, because this is so recent, I don't think there's a lot of public backlash volume-wise yet. I think you have like the watchdog groups trying to get back out there and tell people about this so that they can have additional backing. But ultimately, I mean, good luck fighting Microsoft. Like they're gonna get what they want, right? So it's gonna be very interesting. And that's supposed to come online in 2028 is their initial plan. So if all goes according, it's practically right around the corner.
Yeah, well, we won't have to worry about not having good timing on this one because there's, like you said, there's going to be a lot of discussion about this, and I'm pro-nuclear, so I think it's a great move on their end. I think it's win-win for Microsoft and for the state, and your state's actually doing really well right now. You shared a market report on the industrial side about Philadelphia with me recently. What's going on in Philadelphia? Like it sounds like there's a crazy amount of activity right now.
Yeah, I mean, obviously for the industrial market there being right on, the port right there, it gets a lot of traffic. So obviously the the shorter distance you have to go from the port to your warehouse is what everybody wants. So Philly is always going to be, in my opinion, uh, a pretty good location for having industrial. Now, obviously, you have unique industrial over there. It's one of the older cities, so you have a lot of really old buildings, but in the surrounding suburban areas that do have that warehousing component because they're along the major roadways and that type of thing, it's there's a lot in the construction pipeline, and there's a lot that while it's being delivered, there's still the sublease vacancy is creeping up slightly, but I think it's really because most places either overestimated what they needed just recently throughout the pandemic, and now they have to right size, or they have to upgrade the facility to a point that wherever their current location is isn't really making sense for them. They just need to move somewhere where they maybe have a cross docking setup, or even like with Amazon, right? They build all their stuff, but like the automated delivery install of the mechanics in the warehouse that they need. A lot of buildings can't necessarily support that. I actually have one listed. It's up in Huntington County, but it's got a second story on it. And I will tell you what, it is such a deterrent for everybody. Even though you have the freight elevator, and it's, again, it's always time. It takes time. It's too much time that it takes for me to load it in there and then cart it up to the second floor. So those types of buildings in the Philadelphia area, I think, are the ones that will struggle the most and will have to kind of deal with a possible adaptive reuse in some capacity. But other than that, any of the, when I say newer products, I mean 30 years old or less, right? Is really getting scooped up and utilized to the fullest for the most part here. So,
What have you seen with rates in Philly? Has there been upward movement in that, or has it been flat, or what's been going on there?
I mean, I've continuously seen upward movement in just like the entire central Pennsylvania to Philly region. When I first started in industrial real estate, we were looking at rents around $4.95 a square foot, somewhere in that $5, $5.50 range was normal. And now a lot of them are around $7.95 a square foot. And up, depending on, I mean, if you can find a really nice one that's got a cross dock setup, you're probably talking $10.95, $11.95. Closer you get to the port, obviously, the higher the pricing goes. And in the Naval Yard, there is a lot of new construction there that's going on that is warehousing and life science buildings. So there's a lot of product going right in that area that is adding to obviously the available product in the market, but that product is so pivotally like positioned that you're going to be able to really make some money off the buildings there because they're going to be practically brand new, and they have this huge, I think it's like multi-phase development project happening on that whole section, and that those rental rates are going to be much higher, obviously in life science buildings, but even in the industrial buildings that are going there, you're probably looking at a minimum of 11 to 13 a foot, I would think, because they're brand new. But I haven't seen that yet, so I don't hesitate to say it, but I wouldn't be surprised. Let's put it that way.
You mentioned a couple numbers like 495, 795, 1095. Is it common? Is that like a regional thing where you typically see the rent end with 95 instead of just rounding up to the nearest dollar?
Yes. Yeah, I see that a lot actually. And again, kind of like you're like, all right, so you're telling your client you're like $8 a square foot, right? But it's obviously, and I guess it's just the psychological factor that they're trying to go after. Like, oh, it's really in the sevens. Like, but yeah, that is common for me to see here.
That's very interesting. Well, you're right. I mean, that's why stores usually will sell something at 9.99 or 9.95.
Mhm.
It's just to have it under that psychological limit of
Right.
being
Oh,
under
it's
ten
under five
dollars, whatever.
dollars. Yeah.
Yeah,
Yep.
that's so funny.
Um,
I haven't seen that elsewhere, so it's very interesting that
really, that's
that's in
funny.
Pennsylvania. Yeah,
Well, and certain states like California, like their square footage rate is they do it monthly and we do it
yeah,
annual. So that throws people off too. And especially if I have people calling me from across the country, they're like, is that right? And I'm like, yeah, but it's annual, so it's different. Like, oh. So, but yeah, no, even here when I list stuff, I think, yeah, I think the last one I did, 895 a square foot. And now it's not just me. I do get input from my asset manager here as well because we work together on a lot of the stuff. But at 1025 was another one. It's always ended in that one's a little bit much, but that was an end unit, so premium pricing instead of 995.
yeah. So on Pennsylvania, help me out geographically on how you break it up because you said like central Pennsylvania and east would be including Philadelphia. How do you typically define the rest? Like as you start going west towards Pittsburgh?
I mean, yeah, that's so there you have it gets split into about four sections. And you think it would just be, like normal north, south, east, west now. So you have your western part, right? The entire western side of the state from like Erie, like all the way down, like to the middle of state, like State College and then down to the bottom, right? That's all western. That's Pittsburgh handles all of that. Nobody goes out there if you're like not already out in that zone. Um, I have had two times where I had to work on a Pittsburgh deal, and from where I'm at in the Harrisburg region, it's about 3 to 3.5 hour, depending drive, and it's just it's not. I don't want to say it's not worth it, but time, money, right? So, um, once you come from that side, then you have central Pennsylvania, which is mainly like south central, right? I go as far up as Northumberland County, which is pretty north. If it's further north than that, then you either have the northeastern side of the state or the northwestern side kind of just sprinkling together to cover it. There's really not much up there. It's mostly like hunting grounds and state forest and mountainous areas. So like there's not a whole bunch of activity going on in there that you really have to worry about. And then you have the other two regions, which would be the Philadelphia region right in here, and then northeastern PA, which is like your Allentown, Bethlehem, Poconos area, all of that, right? So it's like just a little L shape where you see the majority of the activity happening. I mean, obviously Pennsylvania is a pretty large state, and due to the fact that we do have a lot of state forests and the Appalachians run right through, it gets weird in the middle, so nobody goes there really. So, yeah, you're going to see the majority happening in where I'm active, Central PA. So the Harrisburg region, which covers like Cumberland, Adams, Franklin, York, Lancaster, Lebanon, Dauphin, and Perry counties, right? It's just one big area. Outside of that, Philly and Allentown. And then you have Pittsburgh. That's like pretty much the areas that I
Hmm.
ever work with. Erie has some stuff, but again, like it's so far north. I mean, it'd take me like 5 hours to get there, so I'm not operating there. But
Yep, understandably.
yeah. So that's pretty much how it goes. The most people I see are from Philly and Allentown, to be honest. I have a couple broker friends out of the Pittsburgh region. Um, and nobody from like up north. I don't it's just not where it's happening.
Yeah, that makes sense. So what does Pittsburgh look like in relation to Philadelphia? Like as you go further more, you're almost getting more into Central America and into the Midwest, I suppose, being in
Right.
Pittsburgh. Is it a
Yeah.
different market altogether?
Yes. Yeah, completely. Pittsburgh is it's like a very hilly city, very, very like a lot of like steep hills go all throughout it. You do have a lot of older buildings there, but it takes so far to like truck it all the way out to Pittsburgh from like the port that there's not a ton of warehousing out there. There's more manufacturing warehousing if you are going to see it. And to my knowledge, at least I should say, I am not a Pittsburgh expert in the market there, but the people I know are office brokers out there. So there's a lot of office space. And their rates are a little cheaper there just because they have a little bit lower demand, I think, in that area for all of the asset types, to be honest. But I think from what I've heard, the office market is starting to recover there a bit, in a much more positive manner. So I'm hopeful that Pittsburgh will start seeing some good opportunity hit it as well once we get this power grid stuff sorted out. I know that they had data centers out there that got shut down because they were not able to generate all the power that I get. Like, they couldn't get it into the grid. They were having grid issues of some kind, so they shut them down. And with all of this happening with 3 Mile Island and then the joining of the power grids for the country, I think that will alter Pittsburgh's ability to have data centers out there. And I think they have the space for it out there. So that could be an exciting development on their end as well.
Yeah, totally. So like Philadelphia definitely seems like it's well positioned for continued growth. What are some of the challenges that you're seeing in Philadelphia? Like, a homelessness still looks like it's an issue. Are there other concerns that Philadelphia would have?
I mean, obviously, the positioning of Philadelphia, it gives it everything, right? You have high population, your crime rates are a little higher, you have proximity to other major cities, you're right across the river from New Jersey, but again, it's Camden. So I think that certain companies, they either want to be in Philadelphia for specific reasons. If they don't have a specific reason to really be right in the city, then they're going to go to the surrounding suburbs, which seem to be flourishing pretty well. When, like, if you go to Radnor or Malvern, like these areas have a pretty nice stock of newer buildings, again, that 30 years or younger range, as well as a continuously upward trending movement of people into those suburban areas. So while there's more space for it out there, industrial products, so it is getting put there now because there's really no space to build it right in Philadelphia, right? So you're either having to go through, zoning to rezone an area that maybe it should now be more of a industrial zone, or you're going through all kinds of permitting to try and put a ton of money into older buildings, which people don't really love doing either, especially depending on whatever it is you're working in, especially manufacturing. You need a lot of very specific equipment in whatever you're building for whatever it is that you're manufacturing. And if you don't have like the ability for the floor to handle that capacity or whatever it is, I think that you're not going to see a ton of that happening right in Philadelphia. It's all going to be in the surrounding area that you're going to see that uptick. Now, if you can find a good spot that comes available in Philadelphia, I know there's a lot of people that would still take it because it's right there, like on the port. And again, if you can get your trucks to the turnpike, you can that quickly, then you're set. You can go straight up to, through to New York or down to Baltimore and beyond. It's very convenient, and it's always going to be convenient. So I think it's going to hold its value well for the stuff that's already existing there. Just be hard to get more in.
Yeah, not to put you on the spot with a statistic, but I've heard before that Philadelphia, that you can reach a certain amount of the U.S. population within a couple of hours just by being in Philadelphia. Do you know that number offhand, or even like a ballpark?
So I can tell you that it's within 3 hours of 5 major cities. So you have Baltimore, I mean, you have Philly right there, you have Harrisburg, you have Trenton, you have New York. So you have like everything in the tri-state area right there. Um, it's just, I don't know what the population number is, but just being within a 3-hour drive of all of those
Mhm.
cities, including Pittsburgh as well, is you don't get that at a lot of other port areas. So especially so close. So I think that's why Philadelphia continuously gets to be one of the top, primary markets, or well, secondary, I guess technically, but it's always going to be, as long as politically speaking, they continue to support the business there, which why wouldn't you? You know?
No kidding. How does Lehigh Valley factor into the area geographically?
Lehigh Valley, it's coming up more so now than, like, it was a slow growth process, but now, I mean, it's one of the more populated cities in Pennsylvania. And you have obviously lower crime rates than you would have in Philadelphia, but you have an airport there, and you have the only thing they don't have is the train. And I hear a lot of people complain about that all the time. And that if Allentown just had a train, I think it would really boost their population even further. But having the airport there, being only, I think you're 2 hours, maybe 2.5 from New York at that point, and easy access to, New Jersey and everywhere on the coast, it really makes it like and it's right in between. It's literally right in the middle of Philadelphia and the Poconos. So
Mhm.
it catches travel tourism, and it catches, you know, the just all of the God, I'm sorry, my brain's like freezing up. All of the trucking that comes through, it all drives through there. So your business is pretty booming there. You have a lot of retail corridors because you have in the surrounding communities like Bethlehem, Easton, that's where everybody's like moving. That's where everybody's living around there. Allentown itself does have, all cities are going to have, a certain potential for a crime rate, but it's still considered, I think, one of the better areas, and it has a pretty good medical system there with Lehigh Valley Medical Hospital and System, and I think Geisinger is in there. So it's with those components, it really makes for a really nice area to live in for people because you have access to everything. And I don't know if you saw, we were just in Bethlehem for the industrial SIOR
Yeah,
industrial conference.
I'm so
And
jealous.
yeah, because we got to walk by the steel stacks, and it gives you all the history to that portion, which obviously isn't in use right now, but it's really cool to see because they're trying to preserve it, to keep the history alive. And really right across the street is where we had the conference. So they're really trying to do that adaptive reuse. If you saw the absolute size of these buildings that were there, like, you can't, if you were to even demo them, like, it would be such an astronomically huge project because they're so enormous. So I think they're being very efficient with their costs and just trying to be like, hey, this is our history. Let's kind of memorialize it. And across the street, we'll put some cool projects in and do that. And maybe they'll phase it into the parts they really can't use down the line in like a much more long-term plan. But I think that they're doing good with what they got there, because that's quite a large property to have to find out something to do with it, when you're not using it and it's rusting and falling apart. So,
Yeah, I'm a fan of industrial heritage, and I appreciate that they're trying to integrate that into a new development, but still
yeah,
maintain just that history because it was such an important factory when it
yeah.
was in operation. Are you seeing much on the because it makes sense of Pennsylvania from a strategic location? Totally get why the logistics and warehousing industry is thriving there. On the manufacturing side, I mean, Pennsylvania is well known as the steel state, right?
Yes.
Are you seeing much interest on that manufacturing side? Is there a resurgence of that, or is it still primarily in warehousing?
Yeah, no, it's still primarily in warehousing. Funny enough, the company that I work for, High Associates, we have one of the arms of our company is High Steel, and I think, are the primary manufacturer in the state right now, or one of like two or three tops. And even for the I-95 bridge collapse, we were the only ones that could get the steel in time to fix the problem in a reasonable amount of time, where everybody else was going to take months. We were only, able to get it done in a matter of weeks. You would think there would be a resurgence, but not that I have seen so far. I think that's an industry that it's probably a little difficult to just pop up out of nowhere. Like, if you don't already have the components for the manufacturing of it, I think that would be a little difficult to get into without already owning some of it. But I mean, between that and the state used to be known for the oil too, right? That's what you had in the northern part of the state, was the oil wells. So, and those aren't in operation anymore either. So, coming back to the nuclear stuff, that's what I find very exciting about, because this is a huge gross domestic product now that we can output when we've lost major ones, maybe not fully with the steel, but the oil. And, I think that we needed something like this. And while we're still doing good, I mean, it's always nice to add another feather in your cap, right?
Absolutely. So what's happening in your home base of Harrisburg? And tell me a little bit more about Harrisburg too.
I mean, well, we're at the time of year where you start seeing things slow down a little bit. I think basically, I think most companies are just completing their budgets and finalizing all of that. Um, I have three major deals right now that are going through. One is an office deal, and two are warehouse. And they each are ones that have been in process now for probably 2 months, I would say. The office one only about a month, but you're talking, the office, I think, is around 11,000 square feet, and the two warehousing deals together are 65,000. So people are moving slow still, but they're also trying to get things accomplished before the end of the year. I have some smaller ones that are happening, smaller warehousing ones, that it's like, okay, but I need it yesterday. And it's like, well, we have to go through the process, people. Like, we can't just hand it over, here you go, and we'll worry about paperwork later. So I found that people have waited too long to make decisions, and now they're scrambling, trying to get into places because they've already lost too much time. So, or they're trying to wrap it up by the end of the year. So, I think we'll see pretty stable. It's been pretty just flat. I think I told you last time, we lost the UK distributor Boohoo within one of our 1 million square foot warehouses here, and they were only there for less than 2 years.
Hmm.
So I am concerned and questioning, are we going to start seeing a lot more larger sublet space come available because of the I don't know if I want to really call it an overreaction. I think at the time, these companies really did need a space that was very large to get that product out. But now I think, with the way the economy has kind of tilted further back into people wanting to go out and just shop in person and that type of thing, we're going to see more space come back on the market. And with our pre-construction pipeline that you saw, the amount of and that's Central PA, Philadelphia, parts of Delaware, New Jersey. It's that whole region, right? I think we're going to start seeing maybe prices come down a little, because people will have an excess of options to choose from because of that sublet space. But we'll see. I'm
Yeah,
hopeful.
I'm seeing that too. It's there's a lot of big box warehousing space coming on the market, and
Mhm.
when you start seeing million square foot subleases coming up, yeah, it's I've always thought that there's a bifurcation in industrial where you have like that 1 million square foot market, or even call it like a 300,000 square foot and up market, and then
Mhm.
you have like the small and mid bay market, and
Yep.
that one has almost been like chronically undersupplied because everyone's
Yes.
been focusing on building these large bombers, and
Mhm.
that's where I can see a little bit of pain coming in
Yeah.
2025 for that market.
Right. And like I said, the two warehouse deals I'm doing, that's a 65,000 square foot space, right? That is, the other half of the building, I think it's 129,000 square foot building. Half of it's leased, and then we have that 65,000. We'll be putting two tenants in there. And like you said, that supply is very, there's just not it. I don't want to say there's not enough of it. It seems like we have just enough right now, but I think we're going to see that need come about where we do need more of the 50,000 square foot spaces with maybe the cross dock capability or the capability for the automation and like the Amazon warehouses, they have all of the electric vehicle charging things there now, and they have their own electric power generators that are installed. And, we're going to see a need for more of that type of building come through, especially in Pennsylvania, where it's clear that they're making the investment to the infrastructure to do more of the AI capable things in general, whether that's Microsoft stuff that they're doing or warehousing, picking and shipping, whatever it is, we're going to see that need become more and more apparent. And now that's when you get into okay, do we upgrade that building now or do we just knock it down and start from scratch because it was built in 1948, right? So that older stock of buildings we have in Pennsylvania is going to not, in my opinion, not really be able to be used in the manner that maybe it always had been in the next 20 years.
Yeah,
So,
I've always found it so fascinating that you and I can be in completely different cities, in different countries even, and there's so many similarities because everything that you're saying is what I see in my market and I've seen in other markets that I've looked into as well. So even though real estate is inherently very local, there's still broad trends that happen across North
yeah.
America and the world. And
Mhm.
and I bet anybody listening into this, if they really gave it a hard look into their market, they probably are oversupplied on that big bomber warehouse space. There's
Mhm.
probably an increase in vacancy, probably some downward pressure on rates, but that the mid small bay stuff is probably still very scarce and attractive. And that older space, exactly as I'm seeing, is becoming obsolete's probably too strong of a word right now, but it's certainly on the cusp of being
Right.
obsolete. So yeah, I've always found that so interesting is that real estate's local, but there's a lot of similarities and trends across different markets.
Yeah, that's exactly what I was going to say. The global trend to where like we're all headed towards the same direction. It's just possibly a different pace. You're going to have countries that are not as far ahead as others, but when you're talking about the main large countries we're talking, right? US, Europe, Canada, all of these places, right? They have a very different stock of like buildings that, the buildings over in Europe are obviously going to be much older than the ones in my country, and you still run into those same issues, right? It runs down into the quality of the building and how it was made and what it can withstand. And then you have those developments in building technology as well, where it's like, okay, that was a decent building, but we have made these improvements where now you don't have certain risk factors at all. When you start thinking about like maybe even in like Los Angeles, like for earthquake stabilized buildings and that type of thing, like seeing those improvements get integrated into the new builds, I think is really something that will determine how those trends navigate as we go into the future and how our utilization of them changes because of that. So
Very, very well said. I think that's a great spot to end on, actually. Where can people get in touch with you if they want to reach out and either work with you or ask you a question or just connect?
yeah, please. I'm on LinkedIn. I'm on X. I'm on Instagram. My handle is on X is CRE_Erin, and on Instagram it's just Ms. Erin Downey. And my email, nope, no, it's not, edowney@high.net. So please feel free to reach out if you ever want to just chat or have any questions about Central PA.
Awesome. Well, thanks so much for doing this, Erin. I always
Thanks
appreciate your time and your wisdom, and look forward to catching up at a conference or something down the road.
Yes, definitely. Thank you for having me. It's always a pleasure. So I'll come back anytime.
Sounds good. Okay, thanks again, Erin. Thanks so much.
Thanks. Take care.